bookkeeper does all the recording. Okay? Bookkeeper does all the recording. When you think of bookkeeper, think of the word recording. Okay, the word recording is part of the definition of bookkeeping. When you think about accountant is linked to analyze. Okay, when you talk about accounting or accountant, it's about analyzing, it's about summarize, it's about doing the financial statement. Okay, when you think about accountant, you link with these words: analyze, summarize, doing financial statement. Okay, which one is about bookkeeper? Comparing financial statement? No. Preparing financial statement? No. These are done by accountant. Okay. Provision of information for decision making? No. Done by accountant. Recording? Answer is D. Okay, so this is the word that is important, the key word in the definition of bookkeeping. Okay, so have to remember this. Accountant, analyze, summarize income statement SOFP. Okay, number 2. Question number 2. Which statement is correct? Okay, you see an AMRAS account here. AMRAS account. And is this a personal account? Is this a person's account? Yes. Something to remember about a personal account. Whenever you are doing a personal account, you must remember that you are not this person. In this question, we are not AMRAS. Okay? We are not AMRAS in this question. When you are doing RD account, that means you are not RD in the question. When you are doing James account, that means you are not James in that question. I'm trying to talk about the point of view that you have to know. Okay, when you are doing city account, that means you're not city in that question. Okay, have to remember that. Very important, especially paper 2, sometimes paper 1. Okay, who is AMRAS then? AMRAS must be our customer or supplier. Either our customer or supplier. How to find out? See the entry here. This entry comes from debiting purchases, credit AMRAS. So who is AMRAS to us? Our supplier. Why would you do this entry? We bought goods on credit from AMRAS. That's how I know AMRAS is our supplier. Okay. So what the question is looking for? Following ledger account appear in the books of Leah, a trader. So we are Leah in this question. Which statement is correct? So who are we? We are customer. Okay, Leah is customer. Okay, now see. AMRAS allow Leah trade discount 100 on 30th April. Remember about the previous set of papers. Do we ever record trade discount with double entry? No, right? This is not trade discount. This is cash discount. They are supposed to write the word here receive, but they left it out. This is cash discount, not trade discount. So A for sure is wrong. Now we see the B. Wait, I pick up the 2. Okay, B. AMRAS Olia. You see some problem here from the first 3 words or not? Supplier Olia. No, right? The $2,100 is owed by Leah to AMRAS. The $2,100 is owed by Leah to AMRAS. The other way around. So wrong. C. Leah owe AMRAS 2,950. Yes, correct. Okay, that's the amount Leah owe AMRAS at the end of the year. I won't go to the next question without not reading the D, okay? I will still read the D, even though I've chosen C, to confirm that C is correct. Leah net purchases from AMRAS in April 2009. Net purchases means this one minus purchase returns. How much? 2850, right? 2850. 3,000 minus 150, 2850. So D wrong. Okay, so answer is C. Okay, answer is C. Okay, we do one more. Question 3. We are Sarah in this question. Sarah sold goods on credit to Zafar. We are Sarah, we are supplier. So have to debit Zafar, credit sales. Debit Zafar, credit sales. Which one it is? Debit Zafar, credit sales. Zafar belongs to sales ledger. Sales account belongs to general ledger. So answer is A. How would Miriam record this transaction? Okay, so from this line, I got to know that I am Miriam. Okay, must know the point of view well. We are Miriam in this question. And then next, we find out whether we are customer or we are supplier. Omar sent a credit note. So Omar sent a credit note to Miriam for goods return. Who sends a credit note? It is always sent by a supplier to a customer. Okay, credit note is always sent by a supplier to a customer. Therefore, we are customer in this question. As a customer, we bought goods earlier. Earlier we bought goods. Now we return goods. We call it purchases returns. Answer is C. We have to credit purchases returns, debit Omar. Earlier, before you return goods, you must have bought goods from Omar on credit. Okay, at the point of buying goods on credit, we must have debited purchases and credit Omar. And this time, the other way around, we debit Omar, credit purchase return. Okay, so answer is C. 5. In which book of parliamentary would David record this transaction? So we are David in this question. Next, find out whether we are customer or supplier. From this first sentence, I got to know that I'm customer. I bought goods with cash. So I should record this into which book of parliamentary? Into the cash book. Because when I bought the goods with cash, I credit cash, debit purchases account. I pay with cash immediately as I receive the goods. Therefore, it is to be recorded into the cash book. Some students, they might have chosen D as the answer because they see, oh, selling goods. Okay, then it must be sales. They choose D because they got the point of view wrong. The students think that they are banned. No, we are David, okay? We are David. We are customer in the question. So then why not C? Why not C? Some students, they might have chosen C because they see that, oh, we are customer here. I determine the point of view correctly. That means we are buying goods and pay with cash from Ben. So purchases. So why C is wrong? Because what do you record into purchases journal? When you buy goods on credit, only when you buy goods on credit, then only you record into the purchases journal. Okay, if you buy goods with cash, no, you don't record into the purchases journal if you buy goods with cash. If you buy goods on credit, record into the purchases journal. Buy goods and pay with cash, on the spot, record into the cash book. Okay, A. Question 6. Okay, from time to time, if you have question, you let me know. Okay, you can type in the chat there. I can help you out. Okay, but I'm trying to use the average speed lah. Okay, average speed to explain all the questions here. Question 6. How would this amount be recorded in the petty cash book and the cash book? Okay. Petty cashier received $100 from the chief cashier. For what purpose? Normally, it is for restoring the petty cash, back to the impressed amount. And $10 from an employee who had made private calls on the business telephone. Okay, so $10 from an employee who had made private calls on the business telephone, which means The employee is now paying back to the business lah. The employee is not supposed to use the business phone for private calls. Okay, the employee is supposed to use the phone for business purpose. So this is kind of like compensation. Okay, the employee pays back to the company for using the business phone for private purpose. How would this amount be recorded in the petty cash book and the cash book? These together, 110. And then we have to credit cash book 100. Okay, the chief cashier is the person who is handling the cash book. Chief cashier is the person who handles the cash book. Petty cashier is the person who handles the petty cash book. Okay, so after receiving $110, after the petty cashier has received these two amounts, therefore we have to debit petty cash 110. For the chief cashier has paid $100 to the petty cashier. Therefore, the cash book will be deprived of $100. Therefore, we credit the cash account in the cash book. Therefore, D is the answer. Okay, D is the answer. The petty cashier received 110 in total. The chief cashier pay out 100 in total. Okay, so D. What is an example of a compensating error? This is actually known as compensating error, correct? Okay. So I have to find a transaction that talks about two completely different transactions at the same time. I have to find one that talks about two completely different transactions at the same time that where each of the error, sorry, let's say this transaction 1, this transaction 2, okay? There are two events that are not linked to one another at all. For transaction 1, it has some error. For transaction 2, it also has some error. And both of these errors cancel off one another. Okay, so I have to find one transaction. I have to find one option that has given me two transactions. And for each of the two transactions, they say that there's an error and both the errors cancel out. Which one? Wages undercast by 100. Rent overcast by 100. Okay, how do I know that the D is the answer? Because I see that one is wages, another part of the sentence talk about something else, rent. Okay, part of the sentence talks about wages, another part of the sentence talks about rent. And in a wages account, the figure is always on the debit side. Okay, when you pay for wages, credit cash or credit bank, then you debit wages. Therefore, the figure is always here. They say that this is undercast by 100. That means lack of 100 lah. This amount is lack of 100. Rent is also an expense account. And therefore, the figure is always on the debit side also. Credit cash or bank, then we debit rent. They say that here it is too much by 100. Excess, okay? It is in excess of 100. So are they cancelling off one another? Yes. Okay. Wages account, debit side, lack of 100. Rent account, debit side, too much by 100. Therefore, D is the answer. Also, let's see why the A, B, C are wrong. You pay for office equipment repairs, but you debited to office equipment account. This is known as error of principle. Supposed to debit repairs, but they debited office equipment. Okay, error of principle. Buy goods on credit from C. Jones. Supposed to credit C. Jones, but they credited C. Jones. Supposed to credit C. Jones, but they credited C. Jones. This is error of commission. Sold goods on credit $65 to A Aziz, entered in the books as 56. This is error of original entry. This is error of original entry. Okay, D is the answer. Question 8. What effect will correcting these errors have on the NCA as well as working capital? I believe you know what NCA is. And let me remind you what is working capital. Working capital is CA minus CL. It can also be known as net current assets. Okay, be aware of this term. Okay, net current assets means working capital. It means CA minus CL. Okay, working capital can also be known as net current assets. After preparing Abdul draft financial statement, 2 errors were discovered. So after correcting these 2 errors, what will happen to NCA? What will happen to working capital? Let's see. Purchase of a machine by bank transfer omitted from the accounts. So this is error of omission. To correct this error, simple. Credit bank, debit machine, or we call it machinery. 5,000, 5,000. Consequently, CA drops. CA drops by 5,000 because you spend the money in the bank. NCA increased by 5,000. Okay, after correcting the first error, these are the effects. Based on this, working capital will drop also, right? Working capital will drop by 5,000 also because CA minus CL. If the CA drops, working capital will drop. Buy motor vehicle 15,000 entered in the motor vehicle repair account. This is error of principle, like what we saw earlier, the previous question. So this is an expense. They wrongly recorded this as an expense. So after doing correction, your NCA will go up by another 15,000. Okay, your NCA will go up by another 15,000 after recorded it wrong, after doing the correction. Consequently, what will happen to the NCA? 20,000 increase. Either C or D lah. Working capital decrease 5,000. C. Okay. Okay, yeah. So far so good. Okay. So not very challenging. Not a very challenging correction of error question. Okay, continue to the next one. Why is a sales ledger control account usually prepared by a different member of staff than the person who maintains the sales ledger? To deter fraud. To deter fraud. And okay, how does it work in deterring fraud? It is a bit complex to explain because the explanation usually comes into the topic when you do the higher level of accounting. Let's say you do A level or you do foundation in accounting in the future. Okay, when you get into the college or uni, then you see more of the explanation. For now, for IGCSE exam purpose, all that you need to do is to really just remember the theory. Okay, the control account is prepared by a different person than the person who maintains the sales ledger. Sales ledger is the part that contains all the customers' account. Okay, that's the part that contains all the individual customers' account. The person who prepares this is different from the person who prepares the control account so that we can deter fraud. And actually, there's a term used to describe this. We call this the wait, yeah. But you don't have to know this term actually for now. I've forgotten the term that I have learned in the college. This term, if I can remember, I'll let you know. Okay, but not very important. Not very important for now. Number 10. Straightforward question. Asking you in a control account, sales ledger control account, what should appear here? Which one? D. It is no difference from how you construct a customer account. If you know how to construct a customer account, then there shouldn't be any problem in doing a sales ledger control account because the positioning of figures are the same. Cash refunded to credit customer, you make some refund to your customer, credit cash, debit customer. We refund to the customer. See, debit. Credit sales, we sell goods on credit, credit sales, debit customer. See, we debit customer. You charge the customer interest because the customers keep delaying payment. We debit customer, making the customer owing more to us, credit interest received. So see, for the ABC, we have to debit the customer account. Okay, so we determine the position based on the double entry. Okay, we refund to the customer, we sell goods on credit, we charge the customer interest. This is the only item that appears on the credit side. We have to credit customer, debit sale returns. So answer is D. Okay, so far so good. Okay, 11. Maria's draft income statement. Let's see this first, okay? Always see the line with the requirement, okay? First, what is the correct profit for the year for this year? Okay. They have given you a wrong profit for the year. This is the wrong profit for the year. So you start with this number. On this day, what day is this? Is this the year end? No. So you could be wondering, hey, why this is not year end, right? Year end is not always December 31st. What the year end is, you don't just pick up any date with the last day of the month being presented. Okay, you see that, oh, December, oh, they present the last day of this month, must be the year end. No, you have to see the sentences. You see which one tells you which is the year end. Year end is 31st March 2022. Therefore, beginning of the year is 1st April 2021. This is the beginning of the year. On this day, which is a random day in this period. Agree? Okay. If you try to see, is this date within this period? Yes. You find out. So let's say this point, okay, this point is 31st December 2021. You go on to find out how many months are there before this point and how many months are there after that point. Okay, this is beginning of the year. This is the year end. And before this point, how many months are there? After that point, how many months are there? So we start with calculating with fingers. April, May, June, July, August, September, October, November, December. 9 months before that point. 9 months before that point. I know 12 minus 9 will be 3 lah. I know. But normally I will count with my fingers also. Because once you have calculated the other half of the, not the other half lah. Once you have calculated how many months are here, you also get to cross-check. You also get to cross-check whether the 9 is correctly determined or not. If you take 12 minus 9, you get 3. You don't get to cross-check the 9 whether is it correct or wrong. Okay, so I count with fingers again. From this day until the year end, how many months are there? January, February, March. Okay, so 3 plus 9 is 12 months. Therefore, I'm able to cross-check that this is correct. Let's say I found this to be 4. Is there any problem? Of course. 4 plus 9 is 13 months. In a year, there couldn't be 13 months. Get what I'm saying? Therefore, after I've calculated with my fingers how many months before that point, how many months are there before that point, and I will go on to use my fingers again to calculate how many months are there after that point so that I can cross-check I sum up these two, I must get 12. So why is the month fraction here so important? Because on this day, which is this point, Maria received a bank loan 4,008. The 5% here is the interest to pay. Interest per year. Interest per year. Which was incorrectly treated as a revenue receipt. Many students, they have asked me how to solve this question. This question has got to do with understanding what is revenue receipt and capital receipt and the difference between the two. Revenue receipt means an income in the income statement, which means this item, loan, has been wrongly recorded. It has been wrongly recorded as an income in the income statement. Is this an income? No, it's not an income. It's a liability. Okay, when you borrow money from, let's say I borrow money from you. I borrow 3 billion from you. After borrowing 3 billion from you, should I be very, very happy because I have earned 3 billion? No, right? Because I have borrowed money. That's not my income. Okay, it's a liability. In the future, I have to pay back. So after correcting this, the profit will be lower by 4,008 because it should have been treated as a liability, but they wrongly treated this item as this item as an income. So after doing correction, the income will be lower, so profit will be lower. So I minus 4,008 here. Understand? Now what to do with the 5%? Okay, the next sentence talk about the interest. In error, a whole year's interest on the loan was included in the draft income statement for the year. As far as interest is concerned, you need to know that interest is an expense. Interest is an expense. Okay, interest on any loan is an expense. Expense will reduce profit. Where is the mistake? They say they included interest. They included interest in the income statement. Doesn't sound like a problem, right? The problem is here. Whole year's interest. Is Maria supposed to be charged whole year's interest? Does Maria own the loan for the whole year? Does Maria possess the loan for the whole year? No. Maria possessed the loan for only 3 months. If there's no loan, will there be interest? No, right? Therefore, for the first 9 months, they are not supposed to be interest charged. But due to mistake made, they wrongly included the whole year's interest. They wrongly included the whole year's interest. What we have to do? We have to add back 9 months interest. Okay, because the amount of interest to be charged is supposed to be only 3 months, but they charged 12-month interest into the income statement. So you have to add back 9 months interest. 4,008 times 5% times 9 over 12. This is the 9 months interest that you have to add back. So this question, not easy, okay? Not easy. Have to be very, very careful in understanding the question. 180. This is the 9 months interest to be added back into the income statement. Okay. So expense will be lower, profit will be higher. Therefore, I plus. Okay. Expense will be lower, profit will be higher. Therefore, I plus 180. Then this is the answer. Okay. So calculate this, then you will know the answer. 38480. Wait. Okay. I think I made a mistake. Because I don't see an answer with. I think I overlooked certain thing. Okay, actually, I solved this question before, and I remember this is not the solution I use. Let me check again. Whole year's interest was included in the income statement supposed to include 3 months interest only, but they included 12 months interest. And therefore I have to add back 9 months interest. So I take 4,008 times 5% times 9 over 12, 180. So 180 expense has to be removed. 180 interest expense has to be removed. So profit will become higher. Oh, I got the answer. I thought this is 480. This is 4800. I wrote wrongly. Okay. It is 4800. Actually, I got the answer already. Just now I minus 480 when I was pressing calculator. Okay. So you see how important it is to write properly lah. Okay. Even I myself, I look at my handwriting wrongly. Okay. Minus 4,008. Answer is B. Okay. B. Based on this calculation, minus 4,008 plus 180. Yeah. So far so good. Okay. Question 12. In the exam, you don't do as slowly as how I'm doing this paper here, okay? Because I'm taking time to explain the ins and outs, explaining A, B, C, D, okay? Which statement about reducing balance method is wrong? Which one about reducing balance method is wrong? Lower depreciation in the early years than in the later years. Yes. Reducing balance method, the later years will have lower depreciation. Earlier years you have higher. So, wait. Earlier years higher, later years lower. But they say lower amount in the early years. No, A is wrong. So choose A. But after choosing the A, after reading the A, then you choose A. You don't shade the answer on the answering sheet first, okay? You don't shade the answer by using the pencil on the paper first. You go on to read through the rest also to confirm that they are not the answers first. Okay? It's like you are trying to reconfirm lah, okay? Reconfirm. Each year, a given percentage is deducted from the cost less the depreciation to date. Yes, correct. They are talking about every year you take the cost minus accumulated depreciation, then you multiply with the same percentage. Okay, cost minus accumulated depreciation, and then multiply with the percentage. Okay, B is correct. It is used for assets which give greater benefits in the early years of their life. Yes, especially items which are technological in nature, machinery, office equipment, things which are technological in nature. Usually they are more efficient in the early years of using them. Okay, so you charge greater depreciation. This is correct. You don't choose. Net book value will never reach a new value. New means zero. New means zero. They say that net book value will never reach $0. Yes, it's true. If you try to draw the graph, I'm not sure if you know the graph or not. The graph for reducing balance method. Let's say this is the years, year 1, year 2, year 3, etc. lah, okay? And this is the depreciation per year. Depreciation per year. The depreciation is going to be something like this. And okay, wait, let me try to see how to explain this. But A for sure is the answer lah. Net book value never reach a new value. Net book value is cost minus accumulated depreciation. So as you charge more depreciation, the accumulated depreciation will keep getting bigger and bigger. Okay, it will keep getting bigger and bigger. Eventually, it could be equal to the cost. So net book value can reach 0. Actually, the D is also correct, but I have no idea why there are two answers for the same question. Okay, let me read the A again. Lower depreciation in the early years than in the later years. For sure, this is wrong because in the earlier years, the depreciation should be higher. Okay, so I think we choose the most obvious answer based on our understanding. So answer is A. Okay, depreciation should be higher in the earlier years under reducing balance method. Okay, so this is the wrong sentence. You have to choose it. They are looking for the wrong one. Okay. 13. What is the loss on disposal? They have told you something about disposal. They told you that it's a loss, which means net book value must be greater than proceeds. Net book value must be greater than proceeds. The proceeds is 1,005. What is net book value? Have to calculate ourselves. 4,000 minus. So they say initially you bought a machine for 4,000 and that's the cost. Okay, that's the cost. So net book value is cost minus accumulated depreciation. I already have the cost 4,000. I have to find out what is accumulated depreciation. Okay. Estimated will have with working life 3 years, residual value 100, straight line method. And next, you find out you own it for how long. You bought it on this day. You bought it on 1st April 2021. Then you sold it on 1st April 2022. You own it for only 1 year. What is the meaning of this? You own it for 1 year, it means you must have charged depreciation for only 1 year. Get what I'm saying? We have to calculate depreciation every year. But if you own it for 1 year, that means you have charged depreciation for only 1 year. Now let's calculate depreciation for 1 year. Straight line method, 4,000 minus residual value divide by 3 years. Then you will get the depreciation per year. Depreciation per year. 1,003. And therefore, the accumulated depreciation is also 1,003 because you have owned it for only 1 year. So the accumulated depreciation is also 1 year's depreciation. 4,000 minus 1,003, 2,007. 2,007 is net book value. Proceeds is 1,005. What is the loss on disposal? You compare. Okay. So net book value is greater than the proceeds by. Net book value is greater than the proceeds by how much? So have to minus lah. Have to minus, then you know. I think it's B. So answer is B. Okay. So this question, they are trying to remind you about the formula to use to calculate the depreciation for straight line method. It's not always about multiplying with a percentage, times a percentage, times a percentage. Not always. Straight line method, there are two formulas. If they have given you useful life, this is the formula to use. Cost minus residual value over useful life. Another formula is about multiplying with the percentage. If the question doesn't give you useful life. Okay, so this is another formula for calculating the depreciation under straight line method. Okay, question 14. Good question to do. This is a good question to do. Which journal entry would have been made at the end of the year? They are talking about the transferring process. So what is transferring process? Okay, you come up with a commission receive account, or we call it commission receivable account. This is the year end. This is the beginning of the year. So we call this as opening balance. This opening balance outstanding. We are doing an income question here, okay? In this question, we are doing an income question. And this income is outstanding. When we say that income is outstanding, it means that somebody owes us the income. Somebody who is responsible to pay us the income still owes us the income. Therefore, it is on the debit side because it is a current asset. Okay, the 210 here is a current asset. Balance BD. Okay, 210. Okay, I know you might have not done this topic with me because you joined the lessons halfway through. Okay, therefore here's the chance for me to show you lah. Okay, in case you have no idea how to do this account. Okay, this is the opening balance. I place it to the debit side because it is a current asset. How do I see that this is a current asset? It is an income question. Income which is outstanding means somebody owes us the income. So current asset is a current asset, therefore it's on the debit side. Okay, next. Commission received during the year. They are talking about how much you have literally received during the year. How much have you literally received during the year? 4850. Debit cash or bank, credit commission receive account. So 4850, you put it here. Sorry. Debit cash or bank, credit commission receive account. As you receive the money, you debit cash or bank. And here we have to credit commission receive account. Sorry, it's supposed to be here, the figure. 4850. Here you write cash/bank. And then we have to there's an opening balance. Then the amount you receive is 4850. Then the income statement is here. Okay, how do I know that the income statement detail is there? Must remember, this is always the opposite to cash/bank. Okay, the income statement detail is always opposite to the cash or bank. That's how I know this is here. This number, we have no idea what it is for now. Okay, we have no idea what it is for now, but we can calculate this ourselves. You take 4850 minus 210. Okay, take 4850 minus 210. So calculator, 4640. Okay, answer is either C or A. Okay, answer is either C or A. Which one should you go for? Is it A or is it C? Is this known as debiting income statement? No, this is not known as debiting income statement, okay? This is also not known as credit cash or bank, okay? This is not known as crediting cash or bank. Are we crediting cash or bank account here? No. Based on what we saw just now, the data entry that we have determined, as you receive the commission, we debit cash or bank. Okay, debit cash or bank. Credit commission received. So the one that we have shown here is crediting commission received account. Okay, the detail is the name of the other account. Okay, so focus on the position of the number and the name of the account. This is not crediting cash or bank. This is not crediting cash or bank. This is crediting commission receivable account. Same goes to this. We don't call this as debiting income statement. It's not debiting income statement. It is debiting commission receivable account. And the income statement means the other account that you credit. The other account that you credit. So answer is A. Many students, they would have chosen C because they see that, oh, it is income statement on the debit side. So debit lah shouldn't be a problem. No, you have to focus on the correct things in the T account. You focus on the position of the number and the name of the account. This is debiting commission receivable account. Okay, the detail refers to the other account that you have used. Okay, A. Okay. Question 15. After 15, you let me drink some water. Okay, then we see the next one. 15. How much was the provision for doubtful debt on 1st January 2022? Okay. Normally, for provision for doubtful debt, almost always you have to determine whether doubtful debt has increased or doubtful debt has decreased. So let's see what we have here. They say they use 5% to calculate doubtful debt. What day is this? 1 year ago. This is 1 year ago. Whenever you are looking at dates, in the question, you must determine the relationship among the dates, okay? This is 1 year later. This is 1 year before. 1 year before, the doubtful debt is 800. Okay, 1 year before, the doubtful debt is 800. And you try to see this the same as January 1st, 2022, okay? Try to see this date as the same as this, okay? Because they are just next to one another, agree? They are just next to one another, these two dates. On this date, the trade receivable 13400, of which 600 was regarded as irrecoverable. So they are asking you, what is the doubtful debt? What is the doubtful debt on this date? Which also means, what is the doubtful debt on this date? You take 13400 minus 600 first. Remove all the irrecoverable debt first. Remove all the irrecoverable debt first. Then only you multiply with 5%. Then you can get the doubtful debt on this date. Then you can get the doubtful debt on this date. $640. Answer is B. So you could be thinking now, then teacher, what is the point of the 600 here? Sorry. What is the point of the 800 here? No point. It's just a distraction to you. They are not asking you to determine what is the figure to appear in the income statement. Let's say this question asks you something different. This question is asking you what amount to be shown in the income statement regarding doubtful debt. What amount should you show in the income statement? It is 800 minus 640. The decrease in doubtful debt. How much? 160. So in the income statement, under the other income, you will show decrease in provision for doubtful debt. Let's say this question asks you for something else. They ask you what to show in the income statement regarding doubtful debt. Okay, what to show in the income statement regarding doubtful debt. So you have to find out whether doubtful debt has increased or doubtful debt has dropped. This is the doubtful debt right now. This is the doubtful debt 1 year ago. So it has dropped. Doubtful debt has dropped by 160. When doubtful debt has dropped, is an other income. Okay, so decrease in doubtful debt 160 is an other income in the income statement. So we have to present 160 in the income statement. Okay, but this is the figure that we show in the SOFP. Okay, in the SOFP, we show the doubtful debt at the year end, which is 640. Okay, this is the doubtful debt at the year end. Okay, if they ask you what to present in the income statement, it is the 160. Okay, so let's continue. Yeah, let's go. So far so good. Okay, let's see question 16. So today there are only 2 of you. Supposed to have 1 more student, but it's the holiday season. Holiday season for the international school student. Therefore, many are not able to make it okay, during this month. 16. What is the effect of this error? Okay, what is the effect of this error? After financial statements have been prepared, a trader discovered that the closing inventory has been overvalued, which means overstated. Okay, let me make you clear about one fact about closing inventory. In an income statement, do you present closing inventory? Yes. Under the cost of sales section, we minus the closing inventory here. Agree? We minus the closing inventory here. Agree? Okay. Opening inventory plus purchases. If you have purchase returns, you minus purchase returns, then minus closing inventory. Right? Take note of the sign minus. According to math, minus means when you overlap them, what does it become? Sorry, what does it become? Plus. Minus plus. Therefore, closing inventory is actually a number that you have plus in the income statement. Closing inventory is a number that you have plus in the income statement. Okay. If you cannot see how it is overlap, how are they overlap? I can show you in the form of an equation. Sales minus cost of sales equal to gross profit. Agree? Sales minus cost of sales equal to gross profit. Transform. I expand the cost of sales. Inside the cost of sales section, you have opening inventory plus purchases. If you have purchase returns, you minus purchase returns, then minus closing inventory. Then close bracket equal to gross profit. Now you can see even more clearly. Minus has to be applied to everything inside the bracket. Minus has to be applied to everything inside the bracket. Minus plus. See? So you get what I'm saying, right? Sales minus cost of sales equal to gross profit. And if you expand the cost of sales, it is referring to this opening plus purchases minus purchase returns minus closing inventory. And you can see that minus plus. Closing inventory is a number that you have plus in the income statement. Okay. So if it is overstated, what happened to the profit? Profit will be overstated also, because this is the number you plus in the income statement. If it is too much, profit will be too much also. Get what I'm saying? So either A or B. Capital. What is the effect to the capital? Also overstated, because in the SOFP, after presenting the NCA, CA, then you present capital section. Do you show profit here? Yes. If the profit becomes higher, capital will also become higher. Okay. So overstated also. But profit for the year ended 30th April 2013, this is talking about next year. Okay, so by now we should know that the answer is A, based on our decision. But there's no harm also trying to learn why here will be understated. This is next year's income statement. This is the following year's income statement. You know about something? The closing inventory of a period will always be the same as the opening inventory for the following period. Let's say at the year end, I have 5,000 units of goods. At the beginning of the next year, should I also have 5,000 units of goods? Yes. Whatever that you have not sold off at the year end, you will continue to sell them at the end of the So at the beginning of the next year, okay, at the end of each year, at the end of a particular year, you have some goods left unsold. So you will continue to sell them beginning next year. Get what I'm saying? So the closing inventory here for this year will become the opening inventory for the next year. So in this income statement for the next year, we are actually looking at opening inventory. Opening inventory is overstated. Okay, for this second year's income statement, we are actually considering the opening inventory. The opening inventory is too much. So see again, opening inventory is something that you minus because minus plus minus. So if the opening inventory is too much, then profit will be lower, therefore understated. Get what I'm saying? So something to do with math lah. Okay, plus minus plus, sorry, plus minus 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 plus. Have to be careful with those things. Also be careful with the date. Okay, this is the following year's income statement. Okay, the next year's income statement. Okay, 17. What was the amount of fees in the income statement for the year? This is for you to do the fee receive account. We are looking at an income question here. We are looking at an income question here. So fee receive account, this is opening balance, this is closing balance, and then this is the amount that you literally receive from the client during the year. Opening balance, they say fees owed by client. So this is a CA, present it to the debit side. Balance BD. At the year end, so this is the closing balance, also a certain amount owed by the client. So this is also CA, present it to the debit side. If you are doing for a paper 2, you must know how to come up with the T account, okay? This is the income account. Balance BD 1500, then only you move it up, balance CD. Okay, I show again. This is the opening balance that I've recorded. This is the closing balance that I've recorded. Why is it here? Because it is a current asset, so present it to the debit side. Why is this here? Because this is also a current asset, present it to the debit side. How do I know that they are current asset? We are doing an income question. And they say, oh means somebody who has promised us to pay us some income, still owes us the income. So it is a current asset to us. Okay, now let's record this also. During the year, you receive 22500. During the year, you receive this amount. How to position this? Based on double entry. Debit cash or bank, credit fee receive account. Debit cash or bank, credit fee receive account. Agree? So onto the credit side. As you receive the fee, we receive it in the form of cash or check. So debit cash or bank, credit fee received. So 22500 will be here. The detail, cash or bank lah. The opposite of it, the income statement. This is the missing number. Okay, so far so good. So we have to find the missing number. This is the amount that we have literally received during the year. This is the amount that we have literally received during the year. To find this missing number, combine this minus 4005. 19500A. Okay. Okay. This topic is about accrual and prepayment. Okay. This topic is about accrual and prepayment, also known as other payable and other receivable chapter. Okay. If you don't know where it falls into in your textbook. 18. In my material, it is in the chapter 6. Okay, in my material is in the chapter 6. Nowadays, we are practicing past exam papers, but if you have received my notes, my notebook, that is meant for you to refer, okay? And my notes have the nature of being very straightforward, and easy to understand, easy to refer also. And okay, if you come across anything that you are not so sure about what it means or what that means, you can text me, okay? All of you can WhatsApp me from time to time to ask me any accounting questions, okay? But don't ask me, for example, oh, teacher, how to do this income statement? Ask specifically lah, okay? Don't ask me how to complete the SOFP, how to complete the whole thing, okay? Something like that, okay? Ask specifically. Okay, so that I can help. I try my best to help you lah, okay? 18. Which item would not appear in the appropriation account of a partnership? If you have forgotten how to do this, then forget about doing this question. You can just be doing some guessing game here. So must study well first lah. Then you will know which is the answer. This is a straightforward question. Nothing much to explain here. So if you know the answer, it is the C. C is the answer. Sorry, not appear. Not appear. Not appear. See, knowing how to do doesn't mean that I will for sure do every question correctly, okay? But I try my best to be super careful, of course. Salaries paid to partner is in the appropriation account, so you don't choose it. Interest on capital is also in the appropriation account, so you don't choose it. Interest on drawing is also in the appropriation account, so you don't choose it. Answer is B. B appears in the current account. It appears in the current account. Okay, you can refer to for my material, it is the chapter 14. Okay, chapter 14 notes. Okay, look at the appropriation account sample. I don't think that you will see B in the appropriation account. Okay, so B is the answer. Question 19. Also another question about appropriation account in a partnership chapter. This question, let's see. Total profit made by the partnership in the year ended 30th April 2022. You need to be super familiar with the formatting of the appropriation account. Okay, you have to know the ins and outs. First step is preparing income statement. Second step is preparing appropriation account. Step 3 is current account. Step 4 is SOFP. Okay, everything can be seen from the chapter 14 notes. And they are looking for profit for the year. Okay, in case you don't know, they are looking for profit for the year. Profit for the year appears in two places. It appears in the income statement, last line. It also appears in the appropriation account, first line. Okay, profit could appear in the income statement, last line. It is also in the appropriation account, first line. But I don't think that this is workable because you don't have information about income statement at all. You don't see anything about income statement at all. So I think we can use this. They are in partnership sharing profit and losses 2-1. Who takes 2, who takes 1? You see the sequence of the names being written here. Carol takes 2, Dennis takes 1. Okay. Current account balances were as follows. Dennis 1, Dennis current account. Okay. You have to also know about doing the current account. This question, honestly, not easy. You have to know the ins and outs very well. Otherwise, you could be confused. This is Dennis current account. Normally, we have to present current account for every partner. Okay, normally we present current account for every partner, but this question we just focus on Dennis 1. Okay, initially 2,000, at the end 7,000, which means initially the balance BD is here. At the end of the year, it is a credit balance. That's the meaning of this these pieces of information. At the beginning of the year, the opening balance is 2,000. At the year end, here, okay? And no drawings during the year. She has taken no drawings. That means there is also no interest on drawing. So nothing else to be shown here. If you still know how to do the debit side here, we have to show drawings, interest on drawing, as well as interest on drawing. But there's no drawing, therefore there's also no interest on drawing. Nothing to be shown here. And normally here, what do we show? We show the share of residual profit, or we call it share of profit, as well as interest on capital, salary to partner. But this question is very limited in terms of the information. So we assume that there's only one thing here, which is profit share, or we call it share of profit. There's no partner salary, there's no interest on capital. And this is the only item that affects the opening balance to become 7,000 credit balance. So what figure is this? 9,000. This is the missing figure, okay? This is the missing figure. And because the question has given me opening balance, question has given me the closing balance. There's no drawing. There's also no interest on drawing. Therefore, there should be nothing here. And there's no mention of salary. There's also no mention of interest on capital. Therefore, on the credit side, there should be only one item, which is this. And then I go on to find the missing number, which is 9,000. Now, how can I still find the profit for the year? Not 9,000, not 9,000. Don't see that, oh, A, I believe that it must be the answer lah, because I saw A here. And then coincidentally, I found the 9,000. Don't, okay? Examiners are not stupid. They give you a few numbers. When they are designing the questions, they don't simply come up with the figures here, okay? They try to determine the figures that you may possibly choose wrongly also. Therefore, you don't fall into the trap of, oh, you saw this figure, then it must be the answer. No, you have to follow through all the workings first until the end, then only you know the answer. Okay, now we work on the appropriation account. This 9,000 is representing 1/3. Okay, the 9,000 is referring to 1/3 portion. How do I know? Because the sharing of profit and losses is 2:1, where Dennis takes 1, Carol takes 2. Okay, and if you were to present the appropriation account, the lower half here, you will show a sharing Carol and Dennis. For Dennis, it is 9,000. So for Carol, how much is it? Carol takes 2 portions. So it is 18,000. How to get 18,000? 9,000 times 2. Then you work backwards. Here, there must be a residual profit of 27,000. Okay, I repeat, not easy, I know. You have to complete the current account first to find this missing number. And then you work backwards. Because normally we do income statement, then we do appropriation account, then only we do current account. Okay, the sequence, okay? Income statement, appropriation account, then current account. But this question, we have to work backwards. And from here, I know that, okay, in the appropriation account, for Dennis, it is 9,000 share, Carol 18,000 share, total 27,000 residual profit. Okay, you can also try to work forward lah. You take this times 2/3, you get what? 18,000. 27 times 2/3, 18,000. 27,000 times 1/3, you get the 9,000. Okay, if you are working forward. And then, what else? Is there interest on capital? No, it's not given. So we assume that it's not available. There's no interest on capital. Is there interest on drawing? No, it doesn't mention, so it's not available. Is there salary to partner? Is it mentioned? No. That means in the appropriation account for this question, there is nothing here. So after showing profit for the year, next will be residual profit, which means these two are the same. Profit for the year is the same as residual profit. Therefore, answer is D. Okay. Honestly, not easy, but you still have to do lah. Even though paper 1 carries fewer number of marks, you still have to try your best lah, okay, in trying to solve this question. But I can really tell that majority of the students, they should not be able to do this question, okay, really. They have to know the topic very, very well, then only they can solve this. If you want to be top of the world, getting a separate certificate, then have to know how to do the every question, okay. So we see the mark scheme. I'm interested in knowing whether the answer is D. Once in a while, I come across such a challenging question. Okay, let me go find the answer, okay? Because I seldom do this question, and I seldom getting students asking me for this question also. So I'd like to know the answer. Let me see the mark scheme. Okay, this is the mark scheme. May, June. Question 19. Yes, correct. Question 19, answer is D. Okay, the earlier ones, AABD. Okay, AABD, 16 onward, AABD. Okay, AABD. Okay, correct. Okay, now we see the next one. Which statements are correct? Okay, this question is about company. Because how do I know? Because I saw the word debenture, I saw the word company, I saw, not really lah, okay. Some of the lines here are about partnership, sole shareholder, sole trader. Debenture holder, it is referring to NCL, okay, non-current liability. Liable for the debts of the company, nonsense. They are creditor, okay? They are creditor to a company. The company has to pay them back. The company has to pay them back. Then when they say liable for the debts of the company, it means that these people have to pay for the liability of the company. No, okay? It is the company who owes them. Company has to pay to the debenture holder. So first one is wrong. Partner liable to pay business debts from personal assets. Yes, this is known as unlimited liability. Partners and sole traders, they always have unlimited liabilities. If their business is suffering, as a sole trader or partner, they must be responsible fully for the business debts. Okay, unlimited liability. If you are doing business studies, you should be aware of the meaning of this very well. Okay, if you have done business studies or you are doing, you must have known this term very well. Okay, unlimited liability. Shareholder responsible for the company's debts. Responsible for the company debts only to some extent, only to the extent of however much they have invested. Okay, shareholder, yes, they have to be responsible for the company's debts to the extent of their invested amount. But for now, I'm not sure this is what they are trying to mean. We put this on hold first, okay? This sentence itself is correct, but I'm not sure whether they are trying to mention limited liability. Okay, let's see this. Sole trader responsible for all the debts of the business. Yes, just like the partner. Just like the partner, they are fully responsible for companies' debts. Even it could mean their personal houses, their personal cars could be taken away to pay for the business debts. Okay, as a partner or a sole trader, they have to be fully responsible. So 2 and 4. Okay, so answer is C lah. That means sentence number 3 is okay. Sentence number 3 is okay. But there's a limit lah. Okay, be aware that for the third one, there's a limit because of the concept of limited liability. 21. What is the correct amount of the retained earning? Okay, retained earning is the place where you store all the profits, store all the profits that you have earned. That's the place to store the profits. The draft financial statement show retained earning 31820. Draft means it must be an incorrect figure. Okay, currently this must be an incorrect figure. No adjustment have been made for the following: accrued, prepay. Not sure if you remember about doing an income statement question. Normally, when they ask you to do an income statement in a question, you will be given a trial balance, right? Normally, you will be given a list of items, or we call it a trial balance. Okay, normally they will give you a list of items. And then, along with some additional info, remember? I believe you have seen that kind of question. Whenever they ask you to do an income statement, it will begin with having a trial balance for you, along with some additional info given to you. And the additional info will tell you that certain thing is accrued, certain thing is prepaid. Okay, this will be mentioned in the additional info. I believe you have seen such thing before. And what do you do next before you present the income statement? The 450, you will plus. Then only you present the commission receivable. And for insurance prepay, okay, prepay means you pay too much. You will minus 175 from the insurance figure before you present insurance in the income statement. Okay, what is the consequence? This is about accrual and prepayment, okay? Accrual and prepayment chapter. So they say that they have not done the adjustment. Adjustment means the plus and minus thing that you have to do before you present the income statement. They say that they have not done this. So you have to help them to do it. After doing adjustment, the commission receivable will become higher. If the commission receivable become higher, profit will be higher, which means retained earning will be higher. I repeat, what we are trying to do here is we do the adjustment for them, which they have not done. Okay, we help them do the adjustment. We add the 450 into the commission receivable amount, it becomes higher. If this becomes higher, profit becomes higher. So I plus. Insurance, they are supposed to minus 175 from it before presenting in the income statement. So now we help them do it because they have not done it. So the insurance will become lower after doing the deduction. If the insurance figure becomes lower, profit will be higher also. Okay, so for this question, add up all the three figures, then you get the answer. 31820 plus 450 plus 175. D is the answer. Okay, so this is about being aware of what they are asking. They are talking about adjustment. Adjustment means normally when you are asked to do an income statement, they give you a list of items, also with some additional info. And these are usually presented in the additional info, letting you know whether you should plus or minus from the item before you present the income statement. Okay, they say they left out doing this, they left out doing this, you have to help them do it. Okay. Next, club and societies. Which one is correct? Capital and revenue transactions are recorded in the income expenditure account. No. Capital transaction means capital receipts, capital expenditure, and they are in the SOFP. For example, you buy NCA, you buy a piece of equipment. Equipment is in the SOFP. Capital receipt, for example, one of the club members put a personal car into the club. So there's a capital receipt. Okay, and it's in the SOFP. For revenue transactions means revenue receipts, revenue expenditure. They are in the income expenditure account, but capital isn't in the income expenditure account. So first one is wrong. Non-cash transactions means depreciation, doubtful debt. It's not telling you that it's not about cash, but it could be about check. Okay, it's not telling you that it's about bank. Okay, non-cash transactions means any transactions that do not involve receiving money and making payment. Okay, it's not limited to just cash. It also includes bank. So non-cash transactions means anything that doesn't involve receiving money and making payment, whether with cash or check. When you calculate depreciation, are you making payment? Are you making payment to somebody or receiving money? No. When you calculate doubtful debt, are you receiving money or making some payment? No. So these are some examples of non-cash transactions. Are they in the income expenditure? Yes. B. Many students, I believe, they are confused with this question, okay, because of the certain terms that they are not so sure about. Let's see the C and D. Revenue transactions, I say that it is revenue receipt, revenue expenditure. They are recorded in the receipts and payments account. Not necessary. Sometimes you might have not received a certain income. You might have not received a certain income. Therefore, it's not in the receipt and payments account. And therefore, okay, this is wrong. Closing balance in the receipt and payments account represents a surplus or deficit. No. The surplus and deficit, they are presented in the income expenditure. Okay, when you present the income expenditure account, the last line is surplus or deficit for the year. Receipt and payments account is a cash book. Receipt and payments account is a cash book. It shows you the cash and bank balances. How much do you still have as money? How much money do you still have in the club or society? That is the closing balance showing us, okay, in the receipt and payments. Okay, so B is wrong because surplus or deficit is shown in the income expenditure. B is the answer. Okay, 23. And then we have 12 more to go. I know, suppose you have to do it within 1 hour and 15 minutes, right? Okay, in the exam, you should be doing faster. Total of the subscription that related to the year ended 31st December 2021. You are doing an income question here. Very similar to what we have done here earlier. Okay, this is an income question. Also very similar to the income question here. Okay, so it's about accrue and prepayment. When you are doing club and society topic, always remember, we are not the member. We are not the member, okay? We are always the club. We are representing the club. And subscription is an income to the club, okay? Subscription is an income to us. We are the club. This is the year end. This is the beginning of the year. This is the year end. So this is the opening balance. This is the closing balance. We present them as balance BD. This is the amount that we literally receive from the member during the year. The amount that we literally receive from the member during the year. Let's deal with opening and closing balances first. Pay in advance. This means some members prepay to the club. Some members prepay the membership fee to us. This is current liability because they pay us earlier while it's not next year yet. So we are temporarily owing the members money. So this is CL. So in a subscription account, if you are doing a paper 2 question, this is how you present the 200, the opening balance. Next, we present the closing balance. Always be careful when you are presenting the closing balance. Focus on showing the balance BD first. Focus on showing the balance BD first. So this 450 is a closing balance because it is a number at the year end. They say outstanding. Outstanding means owe. Some members owe the club subscription. Some members owe us subscription. This is CA, current asset. Okay, because somebody owes us money. Okay, so 450 show here because it's a current asset, current asset, current asset. Then only you move it up diagonally, balance CD. Sorry, the handwriting, change it. 450. Okay, yeah. So that's how you present these two. Amount that you have received during the year from the member. Imagine I received the money in the form of cash or bank, debit cash, debit bank, then credit subscription. So show here 8800. Okay, debit cash or bank, then credit subscription. So it is shown here. Again, this is not crediting cash or bank. This is not crediting cash or bank. Focus on the position of the number and the name of the account. This is known as crediting subscription. Okay. The other entry is debit cash or debit bank, which we are not showing here. Okay, so debit cash or bank, then we credit here. Okay, we are crediting subscription. The missing number is here. The income and expenditure figure. The income and expenditure figure, or we call it the transferring process. Transferring process. How to find this number? Total up here, then you get the answer. Okay, honestly, this question is also quite straightforward, unless you are not able to link it to the topic that you have learned. When you fail to learn a certain question to a certain topic that you have learned, it may confuse you when you are doing the question. 9450 D. Okay, 30 more seconds. Okay, I need to drink some water. Okay, then we move on to the question 24. I drink some water. Okay, now let's see the next page. Let's see the next page. 24. Okay, I can see that there is some switch to the next topic because I see manufacturer here. This is a question about manufacturing account. What was the effect on the cost of production for the year? If you are not sure, let me tell you where is cost of production. When you are doing manufacturing account, cost of production is the last line. If you are doing income statement, under the cost of sales section, cost of production is also presented here. Okay, after doing the manufacturing account, you have to bring this figure into the income statement in case you are not aware. Okay, so let's see what the question is asking from us. Effect on this figure. Work in progress. At the beginning, 6200. At the year end, 5400. So what is the effect of this to the cost of production? For opening work in progress, we always plus, agree? At near the end here, we plus opening work in progress. And then we minus closing work in progress, right? if you still know how to do the manufacturing account. Manufacturing account topic is honestly one of the easiest topic, okay? If you know, then you know how to do. If you don't know, then you don't know how to do, okay? Manufacturing account, if you know the format, you know where to present this, where to present that, it should be very easy. So what is the effect of this to the cost of production? This is something you plus, this is something you minus. So what is the net effect? Net effect is plus, agree? The number that you plus is more than the number that you minus. The number that you plus is more than the number that you minus. So consequently, it's a net plus by 800. You know how I get the 800 minus, right? 6200 is more than the 5400 by 800. So cost of production will be higher by 800. Okay, cost of production will be higher by 800. Okay, due to these two lines. 25. Testing you on the income statement section. Income statement, the cost of sales section. So cost of production has been given 345000. Opening finished goods 42000. Purchases of finished goods 15000. Minus closing finished goods 36000. So they are testing you on the cost of sales section that is shown in the income statement. Begin with opening finished goods plus cost of production plus purchases of finished goods minus closing finished goods. Very simple. Okay, I don't see any challenge here. Shouldn't be a challenge to you, okay? Unless you have forgotten the formatting. Because there's really no challenge here. If you know, then you know. If you don't know, then don't know. Okay, let's do the calculation. 366000. Okay, you take 42000 plus 345000 plus 15,000 minus 36,000. D. Okay. Question 26. This question is a good one. And many students struggle with this kind of question. So what is meant by this kind? Okay, let me tell you what kind of question is this. Normally, if the questions have given you gross profit margin, or they have given you markup, okay, if the question has given you gross profit margin, or the question has given you markup, you can follow this same technique that I'm going to tell you now. Okay, in fact, this technique I taught you when I was doing chapter 16. Okay, but in case you did not attend the earlier lessons, let me tell you how to solve it. Okay, using the technique that I taught in chapter 16. And to solve this question, you see that the question has given you gross profit margin. This is gross profit margin, okay? You must know the synonym lah. This can also be known as gross profit margin. It can also be known as margin alone. The single word margin, only one word margin, cannot be referring to net profit margin. This is not net profit margin. Whenever you see that single word margin is presented to you, it's not net profit margin. Margin refers to gross profit margin, or we call it gross profit margin. Three synonym, okay, three synonym. Gross profit margin means the same as margin, means the same as gross margin. Okay, you come up with the formula. Agree? And here, upper half is gross profit, lower half is revenue. Agree? Okay. Gross profit over revenue times 100 equals to 25. Then, whenever you have sale returns, make sure you minus it first before you show it here. Okay, whenever you have sale returns, make sure you minus it first before you show it as the revenue here. Okay, so 170,000 minus 6,000, you will get 164,000. Yes, right? Okay. So I think it's solvable from here. Gross profit is equal to I know the question is not asking for cost profit, but we do with whatever we are given first. We do whatever we can first. $41000 is the cost profit. Okay, so I have the cost profit. I have, okay, they are asking for closing inventory. Now, you know about sales minus cost of sales equal to cost profit, right? How much is the sales? 164000. Take the one that is after minusing sale returns, okay? Do you have cost of sales? No. So we find cost of sales first, okay? We find cost of sales. Do you have cost of it? Yes. Now I have cost of it. Okay, now find cost of sales. It is very similar to solving mathematics question. You do with whatever that you can do first, okay? Do whatever you can do first. Then at the end, you will get the answer one. Cost of sales is 123000. Okay. Now, what are they asking for from us? They are asking from us closing inventory. I repeat again how I solve it. I begin with this. Okay. I begin with this. Then I found the cost of it. Next step. This is my next step. Then I found the cost of sales. The third step, I work on cost of sales equal to opening inventory plus purchases minus closing inventory. Do I have cost of sales? Yes. Cost of sales is 123000 minus. Should you have opening inventory? No. First year of trading means first year of running the business. Whenever you have just started a business, you should never have anything at the beginning, right? You have just started a business and the business should be empty initially. The business should be empty inside initially. So there's no opening inventory. Okay. Do I have purchases? Yes, I have purchases. 129000 minus, that's the figure I'm trying to find. Closing inventory. Can see? I have cost of sales. Just now I found the cost of sales. And I don't need opening inventory. It is not available. Purchases, I found it from the question. Closing inventory is my intended to find figure. So that's how I find the answer. Closing inventory is 6,000. So you could be thinking, crazy, so much working to do. But this is just one question. Yeah, I know. Once in a while, it may seem that it's not worth it. Just one question in a paper one, and they want us to do so much. No choice. Okay, this is IGCSE lah. Okay. So step 1, I found the cost of it. Step 2, found the cost of sales. Step 3, based on this, I can find the closing inventory. Want to see the mark scheme? Okay, 26. Usually for question that is more complex, I see the mark scheme also. 26, is it C? Okay, 26 is C, correct. The earlier one is D. Okay, correct. Okay, I show it like this in case you want to copy down or screenshot, take picture, okay? You can take down, okay? So now I see question 27 without delay. Looking for purchases for the year. Again, a question about ratio chapter. They have given us rate of inventory turnover. Unless you don't know the formula lah. If you know the formula, it should be very easily solved. So rate of inventory turnover, 5 equal to cost of sales over average inventory. How to find average inventory? Combine this, divide by 2. Combine the opening and closing inventory, then divide by 2. Then you can, so combine them first, then divide by 2. Then you show here. 6400. Can I find cost of sales now? Can you find cost of sales now? Yes. $32,000 is the cost of sales. Is that the answer? No. What are they looking for? They are looking for purchases. You still remember the third step I used for the question 26. Cost of sales equal to opening inventory plus purchases minus closing inventory. Cost of sales is given. Opening is given. Closing inventory is given. Can I find purchases? Yes. Question 27, more straightforward. Step 1 here. Step 2, cost of sales equal to opening plus purchases minus closing. Then I can find the purchases. Okay, let's do it. It's 31200. Answer is B. Okay. B. B is the answer. Correct. Okay. Then we see question 28. This is easier lah. They are asking for net profit margin, also known as profit margin. Profit margin doesn't mean gross profit margin. Okay, profit margin means net profit margin. Sorry. Yes. Okay. This is net profit margin. So you take gross profit minus expenses, then you will get the profit for the year. Okay. So profit for the year is 8,000. Profit for the year is 8,000. Profit for the year over revenue times 100. That is net profit margin. So answer is it 10%? Yes, right. Okay, 10%. If not sure, you press the calculator lah. Okay. Okay. So this question quite easy. 29. Looking for return on capital employed. This is a calculation question also lah. You have to know what is working capital. Actually, not easy for this question. Not easy for this question. Working capital means CA minus CL. Okay. This is ROCE, return on capital employed. You have to take profit for the year. Profit for the year over capital, which is 120,000 plus NCL 30,000. Okay. Actually quite straightforward, sorry. Okay. So working capital is not relevant in this question. Okay. I thought that working capital could be relevant. Times 100 equal to, you can get the answer. Okay. 20,000 is irrelevant. So profit for the year over the capital plus NCL. Answer is B. Let's see. 29. Yes, 29 is B. 27, 28, 29, BAB. BAB. Okay, so straightforward. Unless you fall into the trap of using this number lah, okay, you thought that this is relevant, then you could be getting a wrong answer. Okay. 30. Which ratio does Samuel hope to improve by doing this? Decided to issue statement of account each month to remind customers how much they still owe, to remind customers to make payment so that he can improve trade receivable turnover, so that the customers will pay more promptly to Samuel. Okay, so D. 31. What may have caused the change in the rate of inventory turnover? Has it increased or dropped? It has dropped. What does it mean? it means that John's goods are selling slower. John's goods are selling slower than before. Therefore, John doesn't have to do so many order placement. Okay, that means John doesn't have to place so much orders from the supplier as compared to the year one. Fall in demand. Yes. When the customer demand falls, then the goods are selling slower than before. Higher sales wrong. Lower inventory level. Lower inventory level means John is trying to keep the inventory as low as possible. And does it mean that he will run out of goods quickly? He will run out of goods more quickly. Okay, I write down. Okay, this will cause John to run out of goods very easily. John will run out of goods more easily because the inventory level is low. Therefore, John will run out of goods very quickly. Therefore, has to order more frequently. Okay, when John orders more frequently from the supplier, this should have increased. Okay, when the inventory level is always kept low, then John will be running out of goods very quickly. John always run out of goods very quickly. So he has to place more orders frequently, and this should become higher. Low selling price. Low selling price should translate into higher sales. So therefore, D is also wrong. Okay. Higher sales means he will also run out of goods quickly, and therefore should be placing more orders with the supplier. But this is a drop. 10 to 8 is a drop. Okay. 32. Okay. 32, honestly, not easy. Because you have to do plenty of calculations to solve the question. What happened to Maya's cost of sales and expenses in year 2? I show you an example, you try to solve it, okay? They say that annual revenue is 100,000. Year 1, year 2. So I show you how to solve for the year 1, okay? Let's say we are trying to present the income statement for 2 years. Income statement for year 1, income statement for the year 2. First line is the same for both years. Agree? Because they say annual revenue. First line is the same for both years. Based on the gross profit margin, you can find out what is the gross profit. Based on the gross profit margin, you can find out what is the gross profit and also the cost of sales. So I press my calculator to get it, okay? 100,000 over 145 times. Hold on, yeah, there's an insect. You give me a second. I have to open the door to let it go out. I'm scared of the insect. Okay, sorry, I'm back. I've put something upon the insect. It's no longer moving. Okay, but it's not that. Okay, so tomorrow I will let I will see whether it's still alive. Okay, so 32. Okay, I'm solving this one. Okay, the gross profit margin 45%, right? So I'm not sure if you know the technique or not. Sales, cost of sales, gross profit. The gross profit margin tells you that this is representing 45%, and the sales represents 145%, and this is representing 100%. If I can get to know any of the figures, then I can easily find the other two figures. So for example, I know the revenue. Revenue is 100,000. Then I go on to find out how much is 1%. Then I can get cost of sales. Then I can get gross profit. Get what I'm saying? So I take 100,000 divided by 145. Then I know how much is every percent. So 100,000 divided by 145 times 100. Yeah, one cost of sales, one. Sorry, this is about markup. I determined the percentages wrongly. Sorry. The sales should be representing 100%. And then this is 55%. Sorry. The one I used just now is for markup. But this is gross profit margin. So I take 100,000 divided by 100. Then I get to know how much is every percent. Then I times 55. Then I know the cost of sales being 55,000. Then can I find gross profit? Yes, I can find gross profit. So gross profit is 45,000. Okay. Now let's do the same to the year 2 income statement. The gross profit margin is 40%. Gross profit margin is 40%. So this is always representing 100%. This time, this represents 40%. This will be 60%. So if you do the calculation, here will be 60,000. And then the gross profit will be 40,000. Okay, so based on the gross profit margin, you get to find out the cost of sales figure and the gross profit figure. Next, I have to find out the rest of the income statement based on the profit margin, the net profit margin. So 5%, okay. You have to take the profit for the year. Profit for the year to be representing 5%. And then the sales is also representing 100. Okay, sales is also representing 100 because that's the denominator in the fraction in the formula. Okay, so I work on the year 1 first. 100,000 divided by 100, 100,000 divided by 100. I get to know every percent is 1,000. Every percent is 1,000. So profit is 5,000 here. If you don't believe, you can work forward again. Profit for the year 5,000 over sales 100,000. Can you get 5%? Yes, which is the figure they show you here, 5%. Okay, profit for the year 5,000 over 100,000 times 100. So I'm getting back the 5%. Okay. Now, can I find expenses? Yes. Gross profit minus expenses. Gross profit minus expenses, you get profit. So how much is expenses? 40,000. Now do the same to the year 2. We find the profit for the year. So the sales represents 100%. Profit represents 3% this time. Okay, profit represents 3% this time. So every percent is 1,000. Every percent is 1,000. So profit is 3,000 here. Again, if you're not sure why this is correct, you can take this divided by this times 100, you will get 3%. Okay, calculate the net profit margin, you will get 3% based on this. And can I find expenses now? Yes, I can find expenses now. I will get 37,000. So 40,000 minus 37,000, 3,000. Now, this is consistent with the information given here. Can I find the answer now? Yes. Cost of sales, has it increased or dropped? It has increased. Expenses, has it increased or dropped? It has dropped. So answer is C. 32 is C. So you could be thinking again, so much to do again. Yes, this question it has a lot to do. 32C, correct. Okay, so don't just try to determine the answer based on the percentages given here. Okay, this is the best way to find the answer because you can see the figures very easily, and it becomes something that you can visualize. Okay, you have some proof here. Okay, based on the calculation, we got all the figures, which become the proof. Okay, you can see it has changed. 33. Why would a bank manager be interested in the financial statement of a business? Why does a bank manager look at the income statement of a business, look at the SOP of a business? Bank is usually concerned with what? They are concerned with whether the business has the ability to pay back the loan or not. To ensure the funds are sufficient to cover the loan interest, the bank has to ensure that the business can pay the loan interest. Why the A is wrong? A has got to do with supplier. Bank manager is not supplier. This is to do with the government. This is to do with the employee. Okay, so A, B, C are wrong. 34. Which accounting principle does this statement refer? Revenue is only earned when the legal ownership means legal title and legal ownership of the goods and services have passed from the seller to the buyer. Realization. This has nothing to explain. Okay? If you know, then you know. If you don't know, then you don't know. So have to study the principles well. This is actually one of the easiest one. The easiest one to spot that is a realization. Okay, realization is about when do we record sales? When do we record sales? When the ownership has passed from the seller to the buyer, then we record the sales. Okay, realization is about when to record the sales. When the legal title has passed. 35, last question. Next week, we do the next paper. Okay, next paper one. 35, which accounting policy does this statement refer? The information provided in the financial statement should be capable of being independently verified. Okay. Independently verified means everything that is recorded can be, you can find the proof. You can find the proof. Okay. You can find, for example, you saw a certain line in the accounting and you can find out whether this is true to see the document. Okay, by looking at the document. So you go through all the documents to see if there is really such entry from the document or not. So it can be verified. Okay, it can be determined whether it really exists or not. It's about reliability. When the information can be verified, it means that the financial statements are reliable. Reliable to be looked at, and it can be used to make the correct decision. Okay, so this one is also about the theory part of the subject. Have to study well, reliability. Okay, so there you go.